more gloom for Greece's economic prospects as yesterday's Standard & Poor's rating service lowered its outlook on the financially troubled nation's long-term credit rating. The ratings firm said it's likely Greece will experience a shortfall in its 2012 budget, downgrading the long-term sovereign credit rating from stable to negative. This latest news comes at a fragile time for Greece as the economy worsens and the Greek government delays implementing cuts. In a statement released yesterday, the ratings agency provided little hope for the faith in Greece's ability to climb back out of its recession. An analyst from Standard & Poor's said, "We are revising the outlook on the long-term ratings on Greece to negative, reflecting the possibility of a downgrade if Greece fails to secure the next disestablishment of the EU IMF programme." This possibility of a downgrade relies on the nation failing to get additional funding from other Eurozone countries and the International Monetary Fund. These types of loans are what Greece has been relying on since 2010, when high interest rates pushed the struggling country out of bond markets. Now the country may need loans as much as €7 billion this year as economic growth continues to decline. Greece's gross domestic product contracted 6.20% in the first quarter of this year over the same quarter the previous year. Although the government has imposed many measures to save money, such as harsh austerity measures, reducing pensions and salaries, repeatedly hiking taxes and increasing the retirement age, Greece's financial minister Yanis Storanis suggested these measures were not enough. He said that by reviving a labour reserve for civil servants, which changes workers' rights, would achieve savings for Greece. However, these remarks were immediately criticised by other government officials. The leader of the Democratic Left Party stated, "We must avoid adding more unemployed people to the ranks of those who are already unemployed," even going as far as to say the plan was a fiasco. The increased pressure on Greece has investors looking out for falling stocks today. This morning, Asian stocks were trading on a mixed note, commodities were edging lower and the euro turned weaker following recent gains. Talks between Greece and a visiting delegation of international creditors will meet early in September to resume discussions on how the country will meet demand for €11.5 billion worth of cuts, whilst avoiding targeting low earners. That's all from me for now, but stay clicked onto the Dukascopy website for more interviews and updates. Goodbye.